It's tax season again, and you know what that means. Time to check your tax withholding. But why is it so important? Well, it can prevent those nasty surprises when you file your taxes. Too little withholding can lead to a tax bill or even a penalty. On the flip side, too much withholding means you're basically giving the government an interest-free loan until you get your refund. Let's avoid those headaches, shall we? When to check your withholding? Here's the deal. You should keep an eye on your withholding early in the year, especially when tax laws change or when your life goes through some changes. Life changes can be exciting or challenging, but they all impact your taxes. These include 1. Lifestyle changes. Think marriage, divorce, having a baby, adopting a child, buying a home, retiring, or even filing for Chapter 11 bankruptcy. Yep, all these things matter to the taxman. 2. Wage income changes. This one's a biggie. If you or your spouse start or stop working or pick up a second job, your withholding should be adjusted. 3. Income without withholding. Income sources like interest, dividends, capital gains, self-employment earnings, and certain IRS distributions need attention. 4. Adjustments to income. Deductions like IRS deductions, student loan interest deductions, or alimony expenses can affect your withholding. 5. Itemized deductions and tax credits. Medical expenses, taxes, interest expenses, charitable donations, dependent care costs, education credits, child tax credits, and earned income credits all play a part. Changing your withholding. So, how do you change your tax withholding? It's not rocket science, but it does require some paperwork. Here are the steps. 1. Use the withholding estimator. First, use the IRS withholding estimator to see if your withholding needs an adjustment. I will put a link in the description below. 2. Fill out a new Form W-4. If the estimator suggests changes, complete a new Form W-4, also known as Employees Withholding Allowance Certificate. It's a vital document that helps determine your withholding, so don't take it lightly. 3. Submit the form to your employer. Once you've filled out your new Form W-4, hand it over to your employer. They'll use this info to adjust your withholding accordingly. 4. Pension or annuity income. If you're dealing with pension or annuity payments, there's a specific form for that too. It's called Form W-4P, Withholding Certificate, for pension or annuity payments. Fill it out and submit it to the payer. 5. Make extra payments. Sometimes, you might need to make extra or estimated tax payments to the IRS before the year's end. This can help if you have additional sources of income that aren't subject to withholding. What income is subject to withholding? So, what kind of income gets withheld? Well, the most common ones are your regular pay, commissions, and even vacation pay. But it doesn't stop there. Reimbursements, expense allowances, pensions, bonuses, commissions, and gambling winnings can all be subject to withholding. Your withholding depends on 3 things. 1. Your filing status. Are you filing as single or married at the lower rate? It makes a difference. 2. Withholding allowances. The more allowances you claim, the less gets withheld. Simple as that. 3. Additional withholding. If you want extra money withheld from each paycheck, you can specify that too. Remember, when you fill out your Form W-4, you need to indicate your filing status and the number of allowances you're claiming. It's not enough to specify a dollar amount for withholding. Keep it in mind, and you'll keep your tax season stress-free. Hi, this is Evangeline Giron, an enrolled agent and the founder and principal consultant of Evangeline Giron, Incorporated, which is based in Los Angeles, California. My office serves more than 2,000 clients from all over the U.S. since 2008. I am committed to sharing informational and educational tax and finance videos to empower taxpayers.